Welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Naomi Comfort, and Naomi's been a guest several times before on this show, so I'm looking forward to talking with Naomi again. She's always a great guest. So, Naomi, thanks for joining me here today.
Thank you, Mike.
Naomi is an attorney. The company, Silicon Valley Elder Law.
Yes, that's correct.
Okay. And Naomi has taught continuing education courses on fiduciary income taxation and other subjects to CPAs, attorneys, and the public. But her focus really right now is in elder law. And so things have shifted, I guess, a little bit for you over the years. So finding your niche. Anyway, so today, Naomi and I are going to be talking about a subject that may sound a little bewildering to you, so I'll apologize in advance, but we're talking about financial capacity. And so we'll also talk, as we get started, really about what is financial capacity, anyway, what and why it's important, especially in the elder law context. And so that's what we will be talking about. As we get into this, really, again, you should view this as sort of like an introduction. This is a complex legal area. I'm sure that there are whole courses that are taught about this, continuing education of the bar and so forth. And so we're going to provide a basis for you, hopefully, to have a conversation with your own attorney and advisors. Okay, Naomi, what is this thing, this financial capacity? Sounds like something very mystic.
Well, let me start by talking a little bit about elder law attorneys and what we do and why financial capacity is such an important area of what I'm dealing with on a day-to-day basis with my clients. So an estates and trust attorney helps people set up their wills, set up their trusts, and oftentimes their focus is really on what's going to happen with the assets when their client passes away. Yes. Who's going to receive them? How do we transfer them without incurring excess tax or with incurring minimum amounts of taxes, looking at estate and gift tax and property tax and income tax and all that. So they're focused very much on the transactions that happen when somebody passes away. An elder law attorney does all that, but we are more focused on the life transition. So we plan for what's going to happen with the assets when you pass away, but we're more focused on how are we going to use these assets and how are things going to be managed during your lifetime, and we ease people through these transitions. We ease them through these big changes and big events in their lives, such as changes in their capacity, which brings up the issue that we're talking about today, which is financial capacity.
Right.
And I think your question was, what is financial capacity? From an elder law perspective, financial capacity is the ability to collect relevant financial information and make sound decisions based on the information that you've collected. From a business perspective or a bankruptcy perspective, a financial capacity, they're talking about the ability of a business to pay off its debts or something like that. That's not what we're talking about.
Right.
We're talking about the mental capacity or incapacity of somebody to understand a financial transaction and engage in a financial transaction that is legally binding because they had the capacity to understand it.
Yeah. So one is there's the practical concern. So in other words, can this person really, from a practical standpoint, understand what's going on related to their finances and in making important decisions, even related to their health care and so forth? So can they practically do that? And the other is from a legal standpoint, do they have the ability to make that decision so that if they do, and they indicate that with their signature or whatever, that's going to be binding for them and for their heirs.
Exactly. And when we're dealing with elders or somebody who's been diagnosed with an illness that's going to impact cognition, financial capacity is a moving target. So just because somebody has a diagnosis of Alzheimer's disease, or just because somebody has had a stroke and is unable to communicate verbally or is unable to sign their name, that does not necessarily mean that they lack financial capacity. So we're looking at the individual transactions and the person's abilities on that day at that time with respect to the individual transactions. So somebody could be extremely impaired and they would have no financial capacity. This is somebody who is, for example, at the tail end of Alzheimer's and has no short-term memory and is unable to communicate, unable to feed themselves, unable to dress, really lost huge amounts. They're no longer the person you knew. When somebody is severely impaired, they do not have financial capacity. They can't sign checks, they can't pay bills, they can't engage in any kind of a contract because they don't have the capacity to do that. Somebody has to step in and engage in those transactions on the elder's behalf. That could be a conservator that's been appointed by the court after the court has found that the person lacks financial capacity. It could be an agent who's appointed under a power of attorney for finance that the elder signed back when the elder had capacity. Or if there's a living trust set up or other trust set up, a successor trustee under those documents might step in. So this is where somebody has no ability to enter into any types of transactions. Somebody could be moderately impaired, and that's where things get dicey. They have impairment. They might not be able to understand a sophisticated transaction, but they can still do things like get their PG&E bill and pay that, make their co-pays at the doctor's office when they go in for visits, do their own grocery shopping, that kind of thing. But they may need assistance for making decisions like, is this an appropriate annuity for me to buy at 93 years old? Should I establish this family limited partnership that my son's attorney thinks I should move all my assets into at this time? It may be too much for the elder to decide. They may need assistance and somebody to step in on a temporary basis or just ad hoc as needed.
Okay. So maybe we sort of filled this in, but the next question that we really have is, when does a person lack financial capacity? So I guess some of it depends on the circumstances of what we're talking about.
Exactly. So what we're looking for is the circumstances, but we're also looking for definitions of what is the incapacity. Many estate planning documents, when somebody drafts, sets up a trust or a power of attorney for finance, it will have a definition of incapacity in that document. For example, the documents in my office say that on a power of attorney for finance, it says that if my doctor has written a letter saying that I can no longer manage my finances, then I'm incapacitated and the agent has authority to act on my behalf. Sometimes it says it requires that the court find you incapacitated. Sometimes it requires that the potential agent maybe has letters from 3 different doctors saying that you're incapacitated. So there may be language in the document that specifies when somebody's incapacitated. And that would give the agent authority to step in then and use the power of attorney or step in as successor trustee or conservator in order to take control of the financial decisions that the elder who's now incapacitated would have been making on their own. So that's one way that we see it. As attorneys, as I'm meeting with elders, I'm having to make that determination based on my interviews with the clients. And you know, a diagnosis is not enough to mean somebody's incapacitated. So I'll meet with somebody who has Alzheimer's disease or some other cognitive impairment and assess whether or not they understand the documents that we're talking about signing. And if they don't quite understand them, but I think they have a good grasp, I might simplify my document to make it easier for them to understand. I have an example of a case I recently worked on. A woman came in with her husband, and they came in because the husband had new health insurance, and the wife needed to sign off on her portion of the health insurance, and she refused to sign it. Well, she has Alzheimer's, she has lots of short-term memory issues, and so the husband was told, you need to get a conservatorship of your wife because she can't sign it. Well, he brought his wife in to meet with me in my office, and I determined that she didn't understand a lot, but she did understand who to trust in her life. She understood what was important. She understood who she wanted to take care of things if she wasn't able to. We drafted a very simple document that named her husband as the agent for finances, and that document's now been upheld by the court, even though she was severely impaired with her illness. She still understood enough of the basic concepts, and on repeated interviews would come back with the same answers to questions. We were able to save these people a lot of money, thousands and thousands of dollars of court fees, because I was able to find a way to get financial capacity for that document so that somebody else could step in without having to go through court.
Yeah. So anytime you have to go to court, it's going to be an expensive proposition, and there's going to be delays. And meanwhile, the clock is ticking, and this person's condition is not improving usually over time. You know, so they're declining, and so you want to get things in order as quickly as you can.
So somebody who is suffering from diminished capacity is a very vulnerable person, and they're vulnerable to others taking advantage of them. And so that's our big concern for us, is not only will they make bad decisions, they'll buy something because they needed it, forgot they bought it, and then buy it again. So maybe you go to the house for a home visit and you open the cupboards and they've got, 27 months worth of Campbell's chicken noodle soup in the cupboards because they're worried about running out. So every time they're at the store, they buy another case, right? I mean, that's a innocuous example. More likely, she goes, they go to the bank, withdraw $5,000 because they want to have cash at home, then forgot where they put it, go to the bank, take out another $5,000, take it home, put it aside somewhere to keep it safe and hidden, forgot where it is, go back again, and all of a sudden the money's not there anymore to take care of them, and nobody knows where it is or what's happened. Or the unscrupulous gardener, or the unscrupulous insurance salesperson, or somebody else is coming in and talking them out of their money, which is, of course, a criminal action, and we get the police and the DA and appropriate people involved in those circumstances. But those are situations that we want to protect against. And so when loved ones notify us that there is a change in capacity, we want to step in and help make sure that things are protected for the elder, and we get a nice buffer zone around them to protect their assets so they're there for them.
So I think just a sort of a summary, while they're in the position that they have capacity, especially if it's evident that they are going to be declining, we want to get things in order as quickly as possible so that they have that person to step in, and we can avoid a lot of this court action that otherwise would need to be required.
Correct.
But more important, so that their finances are handled and that they're not in this vulnerable position of having somebody coming in, elder abuse or whatever you want to call it, to take advantage of the situation.
Correct. Okay. So we do like to have the elder come in. We review the estate planning documents, make sure that they still say what the elder wants them to say, make sure that the designated agents and successor trustees are going to be willing and available to act. Hopefully we can get them to come to a meeting so that the elder has a chance to actually talk with them about what their wishes are, what they want to see happen, and help the agent know where the assets are, what the bills are, what needs to be done with respect to their finances.
So I've been in a couple of these, unfortunately, with my father-in-law and with my brother-in-law's mother, that both got Alzheimer's or dementia, and so fortunately the documents were there, and so I was able to pick up the pieces, and particularly for my father-in-law. I mean, that was one of the cases where let's just say, even though he was in a declining position, he made very good decisions. And that made life a whole lot easier for all of us. He was the one that decided to give up the keys to the car.
Right.
He made the decision to move into the care center. He made the decision to resign as trustee and let my wife step in, and so on. It makes life so much easier when they do that sort of stuff.
It really does, because there's so much anxiety for the family members as they're watching the elder decline about how to keep them safe and when is it appropriate to step in. That's the biggest question. When do I step in? When can I step in? And what if the person's not going to let me step in? How do I protect them? And yeah, it can be very difficult. It can be very, very difficult. I mean, you'll see the stories on the news about the elder driving and, causing these horrendous accidents, and it is a very difficult time for the family.
Right. Well, let's talk about a few of these scenarios, I guess, more or less, that you've sort of laid out here. So what if an elder has been diagnosed with Alzheimer's? What do you do in that type of a situation?
When an elder has been diagnosed with Alzheimer's, that's when we hope to have them come in and review their estate planning documents to check in to make sure about the agents and the successors and that everything's lined up. Another piece of that is checking title to the assets. If they have a living trust, we want to make sure the assets are properly titled into the trust. If there are beneficiary designations on, for example, IRAs or life insurance or other bank accounts, we want to make sure that they are up to date and coordinated with the estate planning documents. If there have been accounts to which the elder has added co-owners, we want to make sure that it's resolved before the elder passes away, whether the person who was added was just added as convenience, or if the elder really intended what was left in that account to pass to the surviving co-owner, because these are things that can avoid horrible disputes after the fact. And if it was done at a time when the elder had diminished capacity, then you're really rife for dispute, because somebody else is going to come in and say that the person whose name was added manipulated the elder into adding their name and transferring the assets. So it is very important to get good guidance during this time period. A lot of people don't want to go to see attorneys, and I can completely understand that. It's expensive. It's really expensive. But the litigation that
more expensive.
caused by failing to make sure things are set up properly is much more expensive. And the cost of the lost relationships between siblings and cousins and aunts and uncles, it's incalculable. What's the word? How do you say that? I'm a lawyer. I should be able to come up with a word.
Well,
can't be calculated. It's just too much.
Okay. Why don't we move on to the next scenario? What if a person is post-stroke? The reason I'm moving on is we only have about 7 minutes left. What if a person has had a stroke and now they can't sign checks? Now what do you do in that sort of a scenario?
Good. So we come back to, do they have financial capacity or not, right? So somebody has had a stroke. Let's say they are nonverbal and have lost the ability to sign their name on a check. Do they have capacity? Potentially. Just because they can't speak doesn't mean they can't communicate. There could be other ways that the person could communicate. So they may still have capacity. From a practical perspective, if they also can't sign their name, it's going to be much easier if you just let an agent step in and act on your behalf, so that things can be taken care of. But it's not a foregone conclusion that just because they're post-stroke and aren't able to verbalize or write their name, that they don't have capacity to manage their own affairs. So I would say that conservatorship proceedings, going to the court and saying, I must be appointed because this person can't handle it, you're going to lose if the person has another way that they can communicate and doesn't want to give up that control.
So that's the issue, is do they have another way to communicate? Maybe you have a telepath in the family, somebody read minds.
You know, you can direct somebody else to sign your checks for you,
yeah.
or to sign anything for you, and,
sure.
and it can be as simple. I mean, I've dealt with clients with ALS and MS and other diseases that leave a person's brain intact, locked inside a body
right.
that's immobilized, and they do communicate still. They still
yeah.
have capacity, and they communicate with blinks or with minor movements that they can still control. So it's two different issues: your physical
yeah.
ability and your mental capacity.
Yeah. So still handy to have those powers of attorney in place.
Oh, absolutely. And with a stroke, you know, it's unlike with Alzheimer's, where it's a progressive
yeah, you may get better.
Stroke, you typically do get better for the first year. Whatever recovery there's going to be is usually maxed out at about a year. So it may be that for 6 months you need somebody to step in and take care of things for you, but then afterwards, you know, I said in the document there's often a place that says, you know, one doctor's letter saying you're incapacitated. Well, there's also a definition of capacity regained. You know, just a doctor's letter saying, hey, she's got her capacity back, and the agent needs to surrender control of all those accounts.
Okay, how about another little scenario? What if the elder person has met a sympathetic individual, somebody that I guess appeals to them, that they like. They met them at church, or a gardener, or a caregiver, or something. This sounds like a potential situation, you know, where they could be open for elder abuse.
Yes. These are really, really tricky situations. When somebody has full capacity and they've met a new friend and they make the decision to give that friend money, even if it's maybe a bad decision or one that the rest of the family and their friends wouldn't agree with, as long as they fully have capacity, they can make whatever bad decisions they want to. Our concern is when somebody has diminished capacity and they are declining cognitively, the question becomes, is it a bad decision that they're entitled to make, in which case the law protects them in making those decisions, or have they been unduly influenced by this person? Is the person perpetrating elder abuse, is there fraud involved, and at what point does somebody need to get involved? And these can become very tricky and ugly situations. So we've had a number of them in the last year and a half come through our office, and they are very tricky situations because the elder oftentimes doesn't want their independence curtailed and feels very strongly and passionately about what they've done and what they're doing. And law enforcement may see it as elder abuse and a crime that's been committed, and the elder doesn't feel that way. So it can be really quite a struggle for the family. There is no, you know, hard and fast rule of yes you can, no you can't give that money away. It depends on the circumstances and the capacity. If you've got $2 million and you're giving away $5,000, it's not a big deal. If you've got $20,000 and you're giving away $5,000, it's a big deal.
Okay. What if this individual, they're starting to miss? Okay, there's bills that aren't being paid. Okay, there are some decisions that are important, like, you know, taking required distributions from your retirement accounts and so forth. Maybe they're missing that. Could be some serious penalties involved. Now what?
What would a concerned family member do is a question. When you see the elder starting to miss payments, not take care of things, and this is a change for the person's regular behavior, this is when you want to step in and start to get involved. And I think that it's most effective if that can be done initially informally, just seeing what you can do to be there to help, and then slowly moving towards taking more and more control of making sure things are done properly. And eventually the elder will hopefully agree to let somebody else take responsibility for these things, so that the elder can focus on just the elder's lifestyle.
Yeah. And there are a lot of things that can be done to help, you know, so they don't get missed. You can have automatic payments made from bank accounts, so you can
Exactly.
set up automatic payment of required
Exactly.
distributions,
Exactly.
all these things. So
And that's what the kids often do set up
Yeah.
on behalf of the elders, but most of my elders aren't as comfortable with the financial transactions on the computer and on the internet to set those up. Some of them are, but many of them are not.
Okay, we're about out of time, so maybe what I'll let you do is throw out a final thought here related to this area of financial capacity, sum up or whatever you'd like to do.
A final thought. If you or a loved one has recently been diagnosed or has had a change in their mental status, really the most important thing to do is to get some assistance and to make sure that the documents are in place while they can be put in place, and that protections are in place to prevent unscrupulous persons from accessing the elders' finances.
Okay. Thanks so much for joining me.
Nice to see you again.
Yeah, it's great having you as a guest. Folks, we've been talking about an important topic here. We've got the graying of America. The baby boomers are, darn it, we're getting up there. And so we're going to be seeing more and more of this as an issue. And so it's good just to be aware and to know where you can go for help. And so as close as your local elder attorney. So we'll see you next time on Financial Insider Weekly.